Well, joining us now to give us some perspective on what's happening with the economy is Jerry McCutchen of the McCutchen Company.
That's right, Jerry. Thanks for joining us.
Good to be here, Bob.
A lot of people have been writing in saying, I've heard all this stuff about Lehman Brothers and everything. They don't really understand it. They're just worried about how's this going to affect me? How's this going to affect my retirement, my 401k? What can you say to those folks?
Well, I think the main thing is to stay diversified. And as Ron said, you need to continue buying if you're in your 30s or 20s and adding to your 401k. But if you're retired or close to retirement, you need to have more income assets in your portfolio that are less volatile during these turbulent times.
Like treasury bills, CDs, that kind of thing?
Well, all types of income assets that have much more stable value. And, our theme at our company is retiring with dignity. So if you're having to look at the futures every morning to dictate your mood of the day, then you're not really allocated the way you should be.
In talking about spending more and making sure that you're still investing, a lot of people want to know what's going to happen to their current investments. Going back to the 401ks, they're made up a lot of mortgage companies and bank companies. Are those things going to start to lose value right now?
Yes, they have lost considerable value. Many financial institutions, Lenise, have lost as much as 80% or more of their stock value. But you need to diversify into many different asset classes, not just financial institutions, but all different sectors of the economy. So as you are allocated properly on the growth side of your portfolio, you will see I think our economy will recover. And we've seen much worse times during my career. And like in '87, we saw a significant financial downturn. We saw 22% drop in October of '87 in one day. We lost 4,500 financial institutions as a result of that time period when we saw the bond market also take a significant nosedive, and all the bad loans, savings and loans basically don't exist today as a result of that. So this is not the worst we've seen. We've seen significantly worse in times past.
Now, Peggy Waters wrote in. She said, I have an IRA with AIG, the big insurance company that's having some problems. How safe is my money? What should my next move be?
Okay, in that situation, Peggy, the AIG is the custodian. It's not invested in AIG stock, as I understand it. So as a custodian, they have a fiduciary responsibility to manage those funds inside there. So actually, in that situation, her funds would be okay. It's just a custodian relationship with AIG, not AIG's value affecting that.
It seems like we're in a react mode as far as the stock market is concerned. What needs to happen in order to stabilize things? Do we need to rein in the banks? Do we need to save more?
Well, I think the banks I'm feeling at this point that we're starting to get all of the bad press out and all the bad news digested. So once there's no other shoe to fall, so to speak, then I think we will start the recovery period. Just like when you're on the precipice of a hurricane, we're looking at the weather radar and seeing that coming. Are we on the backside of the eye? I feel like we are. So I think this economic hurricane that we're looking at, we are toward the recovery aspect of that.
All right. Thank you, Jerry McCutchen. Appreciate you coming by. Thank you.
Now,
if you missed any of our interview with Jerry, you can log on to our website, fox10tv.com. We're going to post the entire interview right after 6 o'clock tonight.
Stay with us.